Everyone wants to make consistent profit trading code, but some traders are still using the same tired setup. What if I tell you there is a secret strategy that works again and again and again, even in crazy market conditions? It is simple, it is powerful, it is repeatable, and it could change the way you trade XAUUSD forever. So I'm Jamie Reji, I'm a forex trader, and I want to teach newbies how to trade like pro. So all you have to do is to click the subscribe button, turn on the notification bell, and like this video so you can get notified whenever we drop a new video like this. And also don't forget to join our community. There we share trading guides, we share trading tips, and more knowledge that can help you become a profitable trader. Without further ado, let's jump in. XAUUSD is one of the most volatile pairs, but that doesn't mean it is hard to trade. That doesn't mean it is dangerous. In fact, this is one of the simplest strategies that you can use to beat XAUUSD over and over and over again. In fact, I've documented all this tested and approved strategy that you can use to beat the market every day over and over and over again. So if you're interested, you can check the link in the description of this video. Now let's jump into the chart to see how you can use this simple strategy to beat XAUUSD over and over and over again. Now make sure you watch this video to the end, because at the end of this video, I'm also going to share a bombshell that can help you trade this XAUUSD without missing any points. Now, let's jump in. To understand this strategy very well, you need to understand the basic market structure. This is the basic market structure. Market structure means how the market moves from point to point. Okay, if a currency moves from 200 to 500, how the currency moved from that 200 to 500 is called market structure. Okay, so some people call it market trends, some people call it major trends, some people call it market behavior. Whatever you call it, just understand that it means how the market moves. And the structure you can see here is called uptrend and downtrend. So if you just see a market breaking structures upward, that is first break of structure, second break of structure, and third break of structure. Once you see a market that have this, then it is called what? Uptrend. And uptrend means you look for buying opportunities. And if you see a market breaking structures downwards, this one is break of structure downward, break of structure downward. So we call this one downtrend. Okay, so in uptrend, look for buying opportunities. In downtrend, look for selling opportunities. The reason why I want to start here is because XAUUSD respects structures very well. The reason why you need to understand break of structures is to know who is winning in the market. In uptrend, buyers are winning. In downtrend, sellers are winning. So it is highly recommended to join the group of people winning. If you see a market in uptrend, then you look for buying opportunity. That will give you a high chance of hitting TP or making a successful trade. And if you see a market that is in downtrend, look for selling opportunity. That will give you a high chance of hitting profit. So now we see how the market behaves. This is called market structure. Now it is time to see how gold itself behave. First of all, I've told you guys that gold respects structures, but when I mean structures, I mean recent key levels. Let me show you. XAUUSD respects key levels, not just key levels, not just any key level in the market. It respects recent key levels. For instance, if gold is buying, creating series of highs, series of highs, series of highs, coming back, the recent level is this one, so it may stop here before breaking another structure. But if this level didn't hold, the next level is this one. So it respects structures from structure to structure. It respects levels from levels to levels. Gold moves from levels to levels. For instance, if this level hold, we may expect this level to hold. And if this level hold, we may expect this level to hold or this level to hold. You understand? It moves from levels to levels. And again, if this level hold, it may come up to mitigate this recent level. Not this one, but the recent level. If it respects this level and pull back a bit, creating double bottom. If it pulls up, it may come back to retest this level. Before what? Before pushing upward. Now you understand this. Now let us look at what are called F and R strategies for confirmation. This F and R strategy for confirmation is what you are going to use as entry model. So whenever you see a setup, expect this entry model to happen before you enter a trade. Whenever you get your structure, whenever you get your level and you think the level will hold, that is something you need to see at that particular level before you jump into the trade. Not all levels will hold. You have to understand that first, okay? Not all levels will hold. So how do you know a level that will hold? How you will know a level that will hold is if you see a confirmation that I will show you now. And that confirmation is this. This is simply the confirmation. Let's assume that the level you are expecting to hold is this, okay? This is a level that you are expecting to hold. You don't just put your limit order. Some people do that, and sometimes you may succeed, but most times you may not. Some people just put their limit order and put their stop loss and put that TP here. Yes, that is fine. But what if the level didn't hold? You may make unnecessary losses in the market. So to avoid these unnecessary losses, you have to watch out for this. And this is it. When you are choosing your levels as a day trader or swing trader, you have to use the higher time frame to choose your levels. Your higher time frame, like your 1 hour time frame, your 2 hours time frame, your 4 hours time frame, or your 1 day time frame. Once you choose your levels, if the market come to that level, then you come down to the lower time frame. If you are expecting a buy, you will see exactly this in the lower time frame. And this means first break of structure, second break of structure, third break of structure, fourth break of structure, and so on. So when the market touched that level, it couldn't break another structure. See it. It couldn't break another structure upward. Instead, it break the structure downward. And that is where your entry is. Okay? You can also call it change of character. Because here, you see the market created a high, created a high, created a high, created a high, created a high. But here, it couldn't break that high. Now, it's changed character. This means that some buyers here are powerful enough to drive the price down. Okay, so once you see this, once you see a break of structure, or this is called M pattern as well. So once you see that the market have stopped creating that highs or that lows, it means that that level is valid. Here the market stopped creating the high, okay, and now it started creating lows. So here is where your entry should be. Your stop loss should be above here, and TP should be here. At least 1:3, 1:2, 1:4, 1:5 can make you profitable with this strategy. So this strategy is simple. Use the higher time frame to mark out your key levels. Go to the lower time frames and you will spot out this. Once you spot out this, you get to change of character. Boom, you enter the trade. So now let's open the chart and see how we could have used this strategy to cut a lot of pips in the market. So this is XAUUSD 1 day time frame. Remember what I told you. Once you get a break of structure, expect that break of structure to hold. Another break of structure, then expect that break of structure to hold, or that key level to hold. Okay, so here's it. When XAUUSD was coming up, it created a high here, it came down, now it went up again and broke that high. Now we get our break of structure. Once you get a break of structure, mark it out to your trend line or your rectangle. Now when the price was coming back, then expect that level to hold. And how do you know if that level will hold? This is a buy setup, okay? So what you are going to see in the lower time frame is this for a buy. So that means here is a change of character in the lower time frame. So but if you are looking for a sell, go to the lower time frame and look for this. Okay? So once it breaks here, then you enter the trade. Now if we go to the lower time frame here, we will see exactly this. Once you spot exactly this, then get ready for massive push up. Now if you go to 15 minutes time frame, so here is the lower time frame and this is the double bottom exactly. This is it. So when the market broke this one, enter immediately after the bullish candle that broke the structure. So your entry should be here immediately after the bullish candle that broke the structure. Okay, your stop loss should be here. Some people tell you put your stop loss below the candle that broke structure, but if you do that, you get more risk to reward profit. But what if the price happens to retrace a little? Okay, that means hitting you out. So I recommend you just put your stop loss below the low. Okay, so and your target should be the next high. Okay, if you do this, this could be 1:3, 1:4. And if you still want to hold, because the analysis is from the 1 day time frame, if you want to hold, then you can still hold and you make a lot of profits. You can still use this example to make this trade here. When you mark out your key level here, if you come to the lower time frame here, you see the market created a high and later broke it. Enter immediately after the break of structure and target the next high. Okay, so it is simple. Just mark out your key level, and wait for the price to come to that key level. When the price comes to that key level, if you are waiting for a buy setup, then watch out for this. Then enter once it breaks this level. Okay, so if you are looking for sell in the lower time frame, look for this. Enter once it break this level. This is simple, but it is not easy though. That is why you need to practice. Okay, trading is not easy. That is why you need to practice. You can still do this using any time frame you want, any time frame you want, be it 1 hour time frame, 4 hours time frame, 2 hours time frame, 30 minutes time frame. But the higher the time frame, the more accuracy you will get using this strategy. Okay, so that is it for today. In conclusion, just remember that XAUUSD respects key levels, and recent levels are one of the most strongest levels. When gold creates a recent level, there are tendencies that it will react to that level before moving up to the next higher level. So if you know this concept, you can trade XAUUSD like pro. In fact, this is just one of the most powerful strategies I've used so far in trading XAUUSD for years now. I've documented all of them, and if you're interested, check the link in the description of this video. Don't forget, we also have trading community where we share trading tips, where we share trading knowledge, where we share guides that can help you become a profitable trader. So make sure you check them in the description of this video. Join us and learn how to trade like pro. For now, see you at the top. Goodbye.